My name is Leo Shimada. I'm the co-founder and CEO of Crowdonomic Media. And today I'm here to talk about crowdfunding and its impact on traditional financial services and regulations. So my mission here is to really give you a report from the front line. So Crowdonomic has been in the crowdfunding game within ASEAN for the last 2 years. By now, we're the largest and fastest growing in regards to membership and also the number of published campaigns. And what really sets us apart from other crowdfunding operators is, number one, we spend a lot of time with regulators to help them shape competitive crowdfunding policy. And the second thing is we position ourselves not as only as a crowdfunding platform, but as a fintech player. Right? So before I go into my 50 slides of details, I'm going to give you the summary, so then you could go to your Facebook and your Twitter and so on. So what is the trend and trajectory that Asia is on? Number one, I think that by now everyone knows that Asia is on its way to using crowdfunding not as only as a niche and cool way to raise funds, but using crowdfunding as a powerful new financing tool, right? And the potential is growing. So when we think about the business, we no longer think of ourselves as disrupting fundraising. We think of ourselves as disrupting the financial sector as a whole. Right? Securities crowdfunding, and I'll use the word crowdfunding, securities crowdfunding interchangeably, but what I mean is about equity crowdfunding, debt-based crowdfunding, P2P. Right? I'll bundle it up in securities crowdfunding. It is going to grow at an accelerated trajectory. And I think that, especially in Southeast Asia, it will outpace reward and donation crowdfunding. Asia, you've all seen the numbers, is going to become a true crowdfunding powerhouse. China will dominate in regards to scale, and Southeast Asia will be the breakout region in regards to growth. Right? Now, the relationship between crowdfunding and traditional financial institutions, I think that quickly, if we see what's happening globally, and as I share my experiences here in the region as well, we're going to start to see that financial institutions will look at crowdfunding operators not as a source of amusement any longer, but as a potential candidate for courtships. And lastly, I think that I used to hesitate. I've spoken at Crowdsourcing Week a few times already. I used to never say this, but I believe truly that 2015 will be the groundbreaking year for regulations for crowdfunding here in Southeast Asia especially. And it also means, I believe, the end of what we call gray operators. So before we talk about Asia, let's zoom out a bit and talk about what's happening globally. Right? So if any of you were reading the Wall Street Journal about 2 weeks ago, Jamie Dimon, arguably one of the most powerful people on earth, CEO of JP Morgan, basically came out to say that, look, there are two threats facing the banking industry today. One is the Chinese banks, and the second is Silicon Valley. And he said that, look, there are hundreds and hundreds and hundreds of startups with the brains and the capital which are posing a serious challenge to traditional ways of banking and financing. Right? And this is not only about one of the most powerful people on earth having a midlife crisis. It is, oh, sorry, I hope Jamie's not listening. But it is happening at an industry-wide movement. Right? So if you place all the fintech players which are in Silicon Valley, coming out from the UK and so on, and you place them against their services and where banks are operating today, you'll see that banks are being exposed to competition in lending, investing, financial planning, data management, and all their core service areas. And this is what's being called right now as the unbundling of banks. Right? Now let's come back to Asia. Right? A lot of these things we see, wow, great things are happening globally, but nothing's really happening in Asia. What's going on? I think that one of the privileges I have as running Crowdonomic is that I get invited to a lot of lunches and coffees and talks with very senior banking executives who run regional banks or banks within ASEAN. And the conversations with them have changed extremely. So it used to be, if I asked them, so who are your competitors? They talked about the global banks, they talked about other regional banks. But more and more and more, they start to mention about other types of competitors. Right? So I've listed here, right, in the white space, the name of the companies which come up the most in my conversations with them. So I want you to put on your banking CEO hat and think about, okay, who are my competitors today? And it's kind of like, imagine who you're going to see there. So these are kind of like the top 9, right? They're starting to talk about Alibaba. They're starting to talk about Baidu. They're starting to talk about Tencent. All these guys who have been known for doing e-commerce, but now are applying for banking license and creating this new business model called the private internet bank. Right? They're starting to talk about AngelList. They're starting to talk about JD.com. They're starting to talk about our crowd, which are using technology to go into alternative asset class and venture capital, which is very new to them. And lastly, they are talking a lot about P2P and debt-based crowdfunding because all these guys like Lending Club are going into their core business of lending. Now, there's great cause for interest as well as concern for people in the financial services industry, depending on which mood you are in for that day. Right? If you took the top 2 players in P2P, which are Lending Club from the US and also Lufax from China, and you looked at their market capitalization would already place them within the top 10 ASEAN banks. Right? They're already at a scale which is a quarter of the top Singapore banks. Their market capitalization already brings them to about a third of the top Indonesian banks. And their market capitalization brings them to almost half of the Malaysian banks and neck to neck with the top banks from Thailand and also Indonesia. And that's something. Now, this is not only some macro view about how this big monster is coming and threatening everything. It's also having real impact at a business level as well. So it used to be that in China, Bank of China, everyone knows Bank of China, had Alibaba as one of its clients. Right? What Bank of China was doing was offering financing options for US buyers who wanted to buy goods from Chinese suppliers. Right? This was a very steady relationship. In February, it was suddenly announced that this relationship had been replaced. Replaced by who? By Lending Club. Right? And the reason is you have a new player, completely different business model, can offer fast-paced, high-quality services at almost half the rate. Now, everything points to crowdfunding becoming a massive industry. You've already seen this slide. I just changed the Singapore dollar, so it looks like I'm showing something new, right? But you'll see that more than half of the industry in the intermediate term is going to come from Asia. And as I mentioned earlier, China will dominate. And Singapore, if you are ASEAN, if you think about where we are today, the growth rates are going to be absolutely outstanding, right? But for financial institutions, this is not the size of prize. It is not about an $80 billion opportunity. It's probably 4 to 5 times that. The reason is because of where crowdfunding, whether it's debt-based crowdfunding, P2P, or equity-based crowdfunding is focusing on, and that's startups and micro and small, medium enterprises. So if you've looked at all the micro SMEs, including startups in Asia-Pacific region, there are about 130 to 160 million of them, right? If you went around and you say, do you think that you're getting sufficient services from banks and traditional financial institutions? Up to 67% of them are saying that, no, we're either not getting the sufficient service or we're not getting addressed at all, right? Banks know, right, because of all these reports from IFC and so on, that if they went into the MSCE, the micro SME sector, that the banking revenue potential is close to 310 billion Singapore dollars. And that's a big deal, right? And that's growing at a 20% compound annual growth rate. This would probably be one of the largest market segments that banks would be looking at, and forget about investment banking and all these other asset classes, right? And the key thing is that this is not adverse selection, right? Crowdfunding, whether it's ECF, equity crowdfunding, or P2P, we're not dealing with and scraping at the bottom of the barrel. It's because banks have too high hurdles to deal with decent customers, right? So the ongoing joke that I have with banking executives is that, look, to get a mortgage, you need to already have a mortgage. To get a credit card, you already need to have a credit card, right? So, that doesn't really leave a lot of chance for, client acquisition, right? And there are a lot of commercial benefits as well, right? Working with or through crowdfunding players, P2P, ECF, and so on, gives exposure to a big, large, and growing segment, right? It also gives you a chance to extract who are the better quality players that you're turning away today to offer and upsell banking services. Lastly, it's a different offering to your existing clients, as well as your private banking and also priority banking clients as well. You can't go to them with the same boring thing day in, day out, right? Lastly, it's an additional chance for you to monetize banks' ancillary services like trust accounts, escrow agent services, and so on. Right? Also, it's proving to become an attractive asset class in terms of investments. So this is Lending Club here. Started off in 2007, probably reached the inflection point around 2010, and right now it's one of the biggest players in the P2P space. Right? Little known fact is that Wells Fargo actually invested about $10 million through a fund called Northwest Venture Partners. And this was at a time, amazingly, when Lending Club was still a Facebook app. It was pre-regulatory approval, right? And lastly, it was before there was any demonstrable traction of Lending Club. And let's see how they did on their investment. At Series A, they bought at 15 cents on a share. At IPO, the original pricing was $15. The first day closing was $23. Right now, I checked yesterday, it's gone down a bit. But at the point of IPO, they made a 55 times multiple on their initial investment. And that's something. Right. So this is where everyone in the financial services industry gets really excited, like, we've been doing financial service forever, we should get into this game. Wow, why shouldn't we, right? So I have my personal opinions, which I don't often share. So what we do is we revert back to what the banks are saying about this idea, right? So BBVA, which is a Spanish bank, they have a research arm, and they basically publish on how financial institutions should respond to this new movement. And what they say is that, look, let's face it, banks are change averse, right? And it's a very different business model. So they go on to say that, okay, what are the design parameters that a traditional bank has in terms of the business model from product, regulations, technology, decision-making, infrastructure, mindset? And you could interpret these as both good and bad, but products, very complex. Regulations, very heavy because of the deposit-taking activities. Technology, very legacy-based. Decision-making, complex. Infrastructure, you have your monolithic and physical infrastructure, branch offices and big buildings. And the mindset is very long-term. If you looked at the DNA or design parameters of a very good, lean financial technology firm, it would be almost polar opposites. Simple products. It's about putting in money to get shares. It's about putting in money to get interest rate return. Regulations, we don't do deposit-taking activities. We should not, right? So the regulations are fit for purpose, right? Technology is often at the forefront of what we do in terms of product advertisements. Decision-making is data-driven. And the last two things, infrastructure. We don't have a massive branch office network. What we want to tap into is everyone's PC, also mobile network. And lastly, it's not about what's happening 10 years from now. It's about how it can be innovative and be driven by speed within 6 months to 1 year. So a lot of the banks are waking up to the fact that, look, attractive segment, we need to get into the game. Doesn't feel right to do it ourselves. So we're starting to see 4 or 5 different types of partnerships which are being formed at a global scale. One is obviously referrals, right? So Santander Bank has arranged with Funding Circle where instead of saying no to a client, they say, okay, we're going to refer you to a partner. And Funding Circle, they will pick up on performance information, make the referral back to Santander. Partnerships around sourcing and distribution. It's a more efficient way to do deal sourcing. They'll do direct investments. So I believe that Morgan Stanley, through its private banking arm, makes investments directly into investment opportunities. And lastly, co-investments. So GE Capital will top up through investment opportunities on our crowd, and we think that this is going to be an increasing trend. And lastly, equity investments, where banks like Barclays, Westpac, and Wells Fargo are having equity participation into platform operators, not only for the returns, but also to understand exactly how this space operates so that they can learn themselves. Right? Regulations. Regulations is going to be the key driver and potentially the key impediment to securities crowdfunding. This is my favorite slide. This is my favorite slide not because I see regulation all over the place. It's because every time I show this slide, I'm able to add a new flag where a country, whether it's a central bank or a securities commission, is saying that, look, we acknowledge that this is a significant movement, and we now need to introduce competitive policy to address these movements. Right? So I think that, just to rattle off some examples, New Zealand has already gone live. In Japan, where I'm from, Prime Minister Abe has said that, look, this is all going to go live in May. Within Southeast Asia, I was actually talking with the Securities Commission in Thailand, for example. They have an amazing framework in the midst of making. Everyone knows that in Malaysia that the bill has been tabled. Hopefully it will be passed sometime this year. And Singapore has announced the first of what we believe to be a series of public consultation papers in order to realize its destiny to become a regional hub for crowdfunding. right? And what we should not expect as operators, observants, and also people in cottage industries, a big bang approach. This will not happen, right? Even in advanced markets like the US or in the UK, it has been a gradual process, right? So I think Paul earlier talked about Regulation A+, which I think is absolutely amazing. I actually have a video from 1 month ago before Regulation A+ came out where I said that, look, US is lost, there's nothing going to happen there, so I have to eat my words now. But, you know, things have been going on for multiple years. If you think about when the Jobs Act was signed by Obama, that was back in 2012, right? It's almost 3 years later now. But, you know, gradually and slowly and surely, they're getting to a place where there's a good competitive policy being drawn up. Same with the UK as well, where they the FCA drew up the CF rules, you know, back in early 2014. And the notable thing is that major players are growing up in tandem or in parallel with these developments. So if you think about the leaders in equity crowdfunding, P2P, AngelList, and also Lending Club, they started they didn't wait for all the regulations to come through. They worked within the framework, grew their business, and today, I think last year AngelList raised 130 million Singapore dollars in funding, and Lending Club, their cumulative raise exceeded 8 billion Singapore dollars, and similar outstanding results by the UK players as well. Right. Now, again, regulators, surprisingly, are making progress to come up with really innovative or competitive policy which fits the needs of the regions, right? So again, 2 years ago, if I looked at major design parameters like issuers, investors, offers, operator role, advertisements, I used to be always told that, you know, this is for corporations. You're only going to be able to raise $1 million. It's only for accredited investors. You have to be a neutral, yada, yada, yada. And it was because they were benchmarking what was happening in the US or UK, you know, a few years ago. Right. I think the bright news is that, you know, regulators are getting over this hangover of just relying on benchmarking what's happening in the UK or US, and they're starting to come up with new, original ideas. And if I highlight some of the ideas that I personally like, you know, issuers, Malaysia, for example, is going to open up the VC funds to be able to crowdsource for LPs, which makes a lot of sense because as a retail investor, instead of having to make an investment decision yourself, you could put it into a fund, which are professionals, which then can use those funds to actually make investment decisions. Investors, I know that a lot of markets are looking at this in a very constricted way, but we see more markets which are saying that, look, as long as there are protective measures in place, we want to be as inclusive as possible and include retail investors and angel investors, many of who are not accredited or high net worth individuals. Right? Offers, we're starting to see a trend where frameworks are being drawn up to have uncapped offers provided from professional investors, right? And also rules for secondary markets as well. Operator roles, and this is good news for us, is that regulators are starting to understand that the operators need to take proactive roles in the formation of the capital. And being neutral marketplaces does not really help, right? So if you look at the Malaysia framework, operators are actually allowed to make investments, lead investments, set up funds, so that there's greater economic alignment between the operators and also investors as well. And I think that this is one of my favorite items within the region. And lastly, advertisements. You know, not restricting this within the website itself, but allowing the use of social media. People often ask me, so what's really special about crowdfunding? And I often say that, look, there are a lot of things, but my favorite is that I really think that the secret sauce for crowdfunding is the use of social media. You validate, you accelerate, and you create virality. And that's worked well for reward crowdfunding. I think it's going to be a cornerstone of equity crowdfunding as well. So regulatory impact on the industry, just bringing it back to the business side, right? I think that we're going to start to see loose formations of alliances between crowdfunding operators and also traditional financial institutions because there's a need and there's an interest there, right? Regulations, it will not be a big bang approach. I think we're going to see the first step in 2015 of competitive and uniquely customized local policies. I think that we're going to see the beginning of the end of loopholes and exceptions, right? And near in, so how's the industry going to grow from all this, right? I think that it's going to be circa 2012 again, where we're going to see many people raise their hand because they want to do crowdfunding because it's sexy, cool, trendy, right? And there's going to be a lot of announcements with very little substance. Medium term, what we're going to see is that many operators will face what's called the fintech deficit, right? So financial technology means that you need to be as technology savvy as you are financially savvy. If you don't have the financial expertise and you think it's about hosting a website, you will fail. If you think it's about financial services and you don't know how to use social media and do product innovation, you will fail. So I think there will be a massive purge and consolidation in the industry. But lastly, at the end of this, we will not only be talking about great crowdfunding platforms. I think that we're seeing the beginning of a dawn of a new type of industry, which is digital financial services. Thank you.
Great. Thank you, Leo. I'd like to open up for questions.
Thank you very much for a very interesting presentation. Let me ask a question. For example, such very crucial parameters like market rates or risk premium or LIBOR, they're now determined by traditional financial services. What do you think, I mean, if the rule of the games will be determined by them, we can't take that the role of crowdfunding and crowdfinance will be very big. What do you think, what will be the future here? Thank you.
So first of all, let's admit that the banking industry is not doing a great job of setting SIBOR or LIBOR, if you've been watching the news lately. So that's one thing. But second thing, I think that, look, there's going to be the primitive approach that you'll see for the next 1 year, where market rate equilibriums will be set by the crowd, right? So if you set too high, no one will invest. If you set too low, people will, maybe. But a lot of this is going to be a data-driven game, right? So whether it's P2P lending or equity-based crowdfunding, a lot of the guys are looking at data insights to see how, whether it's risk premium, interest rates, and so on, are affecting supply and demand, and how that's affecting like NPLs and also returns as well, right? So I think that I would say that, look, there are really good professionals within the finance industry which are doing this. I think that it's going to be a matter of time that they're going to be replaced.
Good.
That's my view.
One more question, please.
Oh, anyone from the banking industry, don't worry. Everyone's going to become a banker, so we're all in this together.
Hi, Leo. This was a fantastic presentation.
Thank you. Yes.
We're a peer-to-peer lending startup from Hong Kong, and very keen to understand from you what is your take on what are the regional trends you would see in this geography, whether it is Indonesia or Malaysia. So one part is obviously the regulation, but as a market, each of these are very, very unique and have their own nuances. So what's your opinion? What's your take on that?
I think that it's going to follow my personal opinion. And you should talk to some of the guys from Lawrence from Mula Sense and so on. But my sense is that scale will be quickly achieved by debt or P2P, right? And I think that equity crowdfunding will be a medium-term play. But it will follow just because of the interest in investments and venture capital and the focus behind governments. I think that my personal view is that at least in the markets that we operate in, which don't include Philippines or Thailand and so on, I think that reward and donation is going to stall within Southeast Asia. Right? It's because in terms of people who are giving in money, I think understand more when they're getting returns as opposed to waiting for innovative new products which have been far and long between coming out here. I think that the reason for lending is because if you talk to micro SMEs, especially outside of Singapore, they're borrowing at annual interest rates of 40 to 60%, right? In many countries, this is predatory lending, right? Whereas if you did collateralized lending, if you looked at the other side, investors are looking at like 12% return. So there's a 38 percentage point spread, right? So there's a huge arbitrage opportunity, which you could do and secure those loans against any kind of collateral that banks will accept, but they're marketable and tradable, and you could liquidate them. Equity crowdfunding, just because I think that it's less instantaneous returns, but Southeast Asia is starting to see these major fundraising rounds, like Grab Taxi raising a few $100 million. You're starting to see like the Rocket Internet coming in. And you're starting to see some really established entrepreneurs who are starting to be very vocal and raise visibility of the industry as well. So if you asked me 5 years ago, I'd say no, equity crowdfunding, we'll work for it, but there's not much of an industry. I think for the first time, there's enough public interest now and case studies that people will get interested in it as an asset class.
Great. Leo, thank you very much.
Okay.
Thanks for coming. A little gift from us.
Okay, thanks
we'll
so
ask
much.
more questions coming back to the panel,
Yes,
right?
yes, please.
Awesome.
Yes,
Great.
thanks so much.
Thank you.
Great, great.